Hi there, I'm Doireann Mc Dermott and today I'm joined by Derek Burleton, an economist at TD Bank in Toronto, to have a look at some growing concern over the Canadian economy. Hi Derek, so let's begin by looking at the Canadian dollar, which has been negatively affected by the fact Canada reported 54,500 fewer jobs in March. Now Derek, this is the biggest monthly employment decline since the country hit recession in 2009. Now, should we be concerned about this latest report? And how is the loonie performing this week as a result?
The employment numbers are a key barometer of the health of the Canadian economy, like any other economy, and they have been slowing quite dramatically in recent months, along with other major indicators. And no doubt one of the reasons why the Canadian dollar has lost such significant ground in the last 4 to 5 months. It was as high as $1.03, about 5 months ago, and it's lost significant ground since that. It's been a few reasons. I think part of it's been the strength of the U.S. dollar, which has affected many currencies around the world, but also just the fact that, or the realization that Canada's economy is no longer an outperformer has weighed on the dollar, and in particular because investors have scaled back the expectation of interest rate hikes in Canada, pushing those back to the latter part of 2014. So the employment numbers we had out on Friday just reinforced some of these concerns in the foreign exchange markets. I don't get too alarmed at the big drop in employment. We have seen a lot of volatility in employment, and we had a few significant increases in employment towards the end of 2012. Lately it's been quite soft, but if you average out the numbers, which we tend to do given the volatility, employment is running at a modest positive growth pace, and I think that's very much in line with what we're seeing in the general economy.
A recent Bank of Canada survey has revealed Canadian companies are becoming more pessimistic about the economy. Now, Derek, what do you actually think about this change in sentiment?
I thought the sentiment numbers lined up with other news on the economy. Businesses still appear to be banking on an increase in sales, just a very modest one. The view on investment certainly is disappointing. It does appear that many firms are not looking to increase investment in the near term, and one of the concerns there is that we're counting on investment to grow along with exports to pull up Canada's economy at a time where we're seeing other sectors slow down, like housing. Right now we're caught in the middle where we're not seeing investment grow all that rapidly. Exports have been a little bit choppy, but not really firming on any significant upward trend. And so we're caught in the middle, and that's what's leaving growth at such a slow rate. We're still confident that investment will pick up towards the end of this year as the U.S. economy gains some strength. But right now, we're at a time where we're not seeing very much of anything happen in terms of growth. And
finally, what other major concerns or events should we be keeping an eye out for in regards to the Canadian economy?
I think the big focus is going to be on the housing market. It's such an important part of the economy, and we've estimated that about between 25 and 50% of Canada's growth has been attributed to housing, and that depends on how many indirect effects you include in that in terms of wealth and all that. So it's been such a major driver of the economy, and there's a lot of focus on the resale housing market as we enter the spring. So those numbers, I think, will be particularly important. We've seen resale activity come off substantially, and in our view, we expect to see some renewed stability as we move through the spring housing market, which would be good news for the economy. So I think that is where there's going to be a lot of focus in particular, but obviously still on other trends in employment. And on the U.S., I think one of the things that came out of the payrolls report last week is that the U.S. is still encountering some headwinds to growth, to recovery, and that's such an important part of Canada's story in terms of sustaining even a modest pace of growth. So a lot of focus on the next round of U.S. payrolls to see whether the disappointment we had in the previous month is just a one-time disappointment. So I would say that. I mean, the usual international financial concerns. Cyprus, Europe, a lot of focus there.
Thanks, Derek. Well, viewers, tomorrow I will be bringing you an update on the Hungarian economy, so see you then.